Hello traders, you're welcome to this video. So if you are looking to take your forex trading to the next level with a unique approach, then you are in the right place. Okay, in this video we are going to be looking at a trading approach known as fading trading. All right, it's also known as counter trend trading. Okay, now fading trading is all about taking a contrarian stance instead of following the trend like most traders do. Fading means we are looking to trade against it. But why, you may ask? Because trends don't last forever. Often there are moments when a strong trend begins to lose its momentum. Okay, there are moments it actually happens, right? Now we can see, even though we had a strong sell trend here, can we see this started all the way from 2021, as we can see the dates from 2021 all the way to 2024 before this consolidation began to form. Right now we can see that although this trend was quite strong for about 3 years, there were moments when the momentum weakened, resulting in significant pullbacks. Can we see price does not move in a straight line? So we can see that after you have an impulsive move, you have a corrective move, have an impulsive move, you have a corrective move, like that and like that. Okay, now in simple terms, when the market is reaching extreme levels, we are looking for it to fade. That's where the term fading came from, right? We are looking for it to fade after it reaches extreme levels. Okay, we look for it to fade or reverse back towards the mean. Now you will see these opportunities when markets become overbought or oversold, and by entering at this high or low points, you can catch a lot of action in the opposite direction. All right, now to succeed with fading, you need to understand the psychology driving those moves. Now let's break it down. When the market is climbing too fast or dropping too fast, as in the case of this selling trend, okay, it often gets into an oversold territory. That's when the market is dropping too fast. It often gets into an oversold territory. For example, let us add on the stochastic oscillator to verify that. Can you see how it was often getting into the oversold territory? You can see oversold multiple times, right? Now, sellers are excited, volume is high, but that euphoria can't last forever. Sooner or later, some traders will start to exit their trades, which will cause the trend to weaken, and boom, here's an opportunity to fade or take a counter trend position. Okay, so basically that is it. Now this is where tools like the stochastic oscillators or other momentum indicators can come in handy. It can help signal when a trend has gone too far and may be about to reverse. For instance, if the RSI crosses above the 80 level, that's often a sign that the market is overbought. If it crosses below the 20 level, it's often a sign that the market is oversold. Now these indicators don't guarantee a reversal, but they can be powerful signals when combined with other factors like price action and volume. So let's talk about setups. Okay, one of the most popular fading strategies is to look for key resistance and support levels. Now if price is approaching a known resistance, for example, let's just, in addition to our trend line which we use to identify the overall trend direction, it's important to also establish key support and resistance levels, as those can help us to find possible reversal points, possible entry points and exit points and all of that. Okay, all right, now at these levels, traders who follow the trend are starting to cash out. For example, as the trend is downwards, when price gets towards the support levels, traders can start taking their profits. And when traders begin to take profits, there's a chance that you see a fade, you see a pullback. And then when we begin to see that pullback, we can then enter a trade. For example, now this is a sell trend, right? Now, when price got to this support level, for example, and traders began to take profits, we can see that a pullback began to happen. Now, in line with that pullback, we can see that the stochastics from the oversold territory was pointing upwards, coming out from the oversold territory. So that was a sign to enter a buy trade. And now, because we are trading in the direction of the counter trend, we have to set our stop loss tightly. Okay, so we set a tight stop loss just below the support level, and then we have to target the next resistance point, the next key resistance point, which is going to be here, because we are trading against the trend. So a reversal, a continuation rather, could happen just immediately after getting to the resistance. So we have to exit our buy trade at this resistance point, and we would have caught around 300 pips. Okay, this is the daily time frame, so that would have been a good catch. Okay, but remember, trading can be risky if we are not careful. Okay, that's why risk management is crucial here. So it's important you set your stop loss at a level where if price moves against you, you will exit the trade. Setting your stop loss at a tight spot just below the support for a buy or above the resistance for a sell is important. Okay, it's important. Typically we'll just place the stops just above resistance or below support, so if the market doesn't fade, we minimize our losses. Now, risk management is key. I recommend risking only a small percentage of your account on any single fade trade, so you can stay in the game long enough to see good results. Okay, and another pro tip: avoid fading in volatile or uncertain markets. Fading works best in relatively stable or trending markets. If there's big news or unexpected events, it's better to stay out. Okay, as markets can be unpredictable and fake outs can wipe out your trade quickly. Now that you have the foundation, or you can decide to practice this strategy on a demo account. Okay, it's important to practice on a demo account before applying it in a real or a live account. Okay, make sure you use an amount you can afford to lose. All right, capital preservation is more important than profit generation. All right, that's a wrap up on fading trading. If you found this video helpful, please smash that like button, and if you want more trading strategies like this, don't forget to subscribe and turn on notifications so you don't miss the next one. Drop a comment if you have any questions and I'll get back to you. Thanks for watching and happy trading.